right, guys, we're back again with another episode of PFREI, a passion for real estate investment. I'm your host, Fuquan Bilal. Today we have Chris Larsen from Next Level Income. This is going to be a great interview. Chris and I go a little bit way back. We'll talk about some of that during the podcast. But man, welcome to the show. Really appreciate you having us on. This is like full circle.
Oh man.
I remember years ago, earlier on, I think I was on my second fund, and we did some investments together, and I've been following you on social media, and I'm like, this guy is really doing it, man. I'm like, he's buying buildings with swimming pools, and this is next Grant Cardone over here. So, we'll talk about some of that a little bit. But Chris, I'm sorry, Chris, to give people a little bit of background about, before you got into real estate, what were you doing, the type of things you were investing in, just your bio, period.
Yeah. So first off, I'm really excited to be here with you today, Fuquan. It's great to see you again. Great to talk to you. And it was great to invest with you. It's probably been like 7 or 8 years now since we worked together in that fund, and it turned out really well. So wonderful to circle back. So I started at 21 investing in real estate, bought my first single family residence, and I managed a small portfolio of those properties. My original plan, Fuquan, was buy enough properties where my net income before debt service was $10,000 a month. And I thought, man, if I can just pay these properties off, make some good money, get a high paying career, 10, 15 years, I'm free, and that was my path. It was going really well. I got to my mid 30s. My mother had passed away. And that was right around the time we spoke, a little bit after that. And I kind of looked at my portfolio and the investing landscape that I was a part of. And I thought, this I can do better than this. But I had my head down. I was working in the medical device industry. I was in that industry for 18 years. Actually just left it here in the not too distant past. And it's a wonderful industry, very lucrative if you're successful, but it has a terrible quality of life. So I kind of evolved my real estate strategy because I didn't want to manage my own properties. I wanted something passive, which is why I invested with you. I also started investing in multifamily at the same time. And my first partner and I, we ended up buying an apartment together, syndicated it. This was back in 2016 when we closed, August 2nd, I think it was 2016, and ultimately grew our investor network. And, as we've been kind of following each other here, our most recent acquisition was a property over 200 doors down in Orlando, Florida, $55 million deal.
Congratulations.
So, thank
you. I saw that and I was like, man, I love this guy. I love following his stuff. And, I love the content you put out. I was like, I got to get my stuff together. This guy is moving and moving. So I love it, man. You inspire me, man. Thanks. So
vice versa.
Yeah. Why are you passionate for real estate investment? I mean, you said you had the medical field. I remember speaking with you back then, and you were really sophisticated in analyzing deals and everything. And I was like, wow, this guy's pretty sharp. And then when I saw you, go full-fledged into real estate, I was like, that's awesome. So why are you passionate for real estate investing?
Yeah, this is really the why of my story. So back in college, I went to Virginia Tech. I was studying biomechanical engineering, but I didn't want to be an engineer. I knew that two weeks in, I wanted to race my bicycle. And I was just writing a email to my coaching clients here that goes out tomorrow morning. And the quote is from Greg LeMond, who was the first winner of the Tour de France from America. It said, it never gets easier. You just go faster. And it's kind of the story of what I've been doing. But I was racing my bike. That's all I wanted to do. I was going to graduate, turn professional, and everything went great. My freshman year, I came out. I won the conference championships that year in the Atlantic Conference. And then the next summer came around, and we were racing, and I was loving it, man. I was traveling. I was with my best friend Chris, and during a race, he died of a brain hemorrhage.
Oh, wow.
I went back to school. I was really depressed. Kind of didn't really get into classes. I didn't want to be an engineer. So I just was riding my bike. And as that year unfolded, I got faster. I got more successful. I was winning races. The next summer comes around, and I'm winning a lot. I'm doing really well. And I'll never forget, I won my friend's second memorial race. It was Labor Day weekend. And I felt nothing. I wasn't happy. And here I'm flying. I should be happy. And I thought, if I'm not happy doing this, I'm really wasting my time. And I had this revelation where I knew my father died at 41. So I know I've mentioned a few big losses in my life here, but I had these imprints in my head. I'm like, if I'm 41 years old, do I want to be like wasting my time doing this, or do I want to have experiences where I can, share these with other people I love, friends? And I wasn't sharing these experiences. I wasn't sharing anything with hardly anybody. It was a very lonely existence in my world at that time. Quit racing bikes, and I'd started investing. I'd started a Roth IRA the year before my freshman year. And this is when the stock market in the 90s was going crazy, kind of like today. So I started day trading. And the reason I did that and I started educating myself was I knew that if I truly wanted to live a full life, I had to be financially independent. I was always kind of entrepreneurial. Well, after dealing with the volatility of the stock market, laying in bed at 3 a.m., and I tell this story on almost every podcast I'm on. I talk about it in my book, Next Level Income, which I'll tell you guys how to get here if you'd like a copy. I realized I don't want to do this in 20 years. I don't want to be laying here at 3 a.m. in the morning worrying about stuff. So I read 250 books. I actually got an MBA in portfolio management and finance. And along the way, I realized that real estate was really what was right for me and my personality. And the reason is you can control the value, you can buy it at a discount, you can add value to it, you have leverage as well, and it's scalable. And this is why 25, 30% of the ultra rich have money in income producing real estate. There's a reason for that. So, I ultimately bought that first piece of property. I kind of talked about how I went into syndication, but the reason I'm so passionate about it, Fuquan, and the reason I like to share it with others is because it's this magic secret, which is why I call it the Holy Grail in my book, where, you can invest in real estate, create true financial independence, whether you're, making $750,000 a year as a doctor, or whether you're just starting out. There's something for everyone. Like one of my coaching clients, no money, no job. He just went out and bought a mobile home park, and he's on his third mobile home park this year that he's acquiring. And the guy's 23 years old. So if you're listening and you're thinking, well, I missed the boat, it's too late for me, I don't have any money, real estate can provide that financial opportunity for you.
Yeah, that's amazing, man. I love your story, and it's heartfelt. It's I really resonated with the part where you said that you were doing something and you wasn't getting anything out of it, and you just had to pivot. Real estate for me has gives me the fuel and to do everything I need to do, not from a financial aspect. It's just the impact what we do with our investing, and I'm pretty sure you add value in certain areas that you invest in as well. I'm completely the opposite of most guys. A lot of guys like the A/B polished stuff. I like the rough, low income stuff because I come from that. So for me to go there and make a difference, even though it's a little bit more challenging to deal with those type of tenants, I'm making an impact and I'm making a difference. Somebody got to do it, right? But I love the stuff you're doing, man. I like the high quality stuff you guys are buying, and it was I was looking at like, this guy's used to high yields. I mean, it's when you see how you went from a passive investor to being more active. Let's talk about that a little bit. How was that dynamic going from not having control, relying on other people to make a return on the money you were putting to work versus now you're in the driver's seat? Even though you're syndicated, I'm pretty sure it's all about who, not how. You're
Absolutely
able to delegate.
Love that word.
But,
love that phrase.
I just read the book, so
I got it right there. It's my book of the year, baby.
Yeah,
yeah.
I love it. Yeah, I had to learn that stuff the hard way, man. It's being the control freak. I want to do everything and have control, but I've learned, who, not how. But let's talk about that a little bit. How did you go from that transition from being passive to being more active, if you will, passive and active? I guess.
Oh, that's great. Yeah, and back when we first met, Fuquan, same thing. Like I actually joined your mentorship program because I wanted to learn more about what you were doing and see if that's something that I was interested in. So, whenever I made an investment, I tried to be as active as possible by still being passive and really understanding that. And I think that's a great lesson if you're listening. Always be inquisitive, learn as much as you can within your parameters. So if you say I want to be passive, at least understand the investment. If you're one of my investors, I'm going to walk through any questions that you might have, and as long as it takes, and there's no silly questions when it comes to that. So for me, what happened was I was always doing something kind of on the side. I had my time-consuming W-2 job where I was in the medical device industry. I was on call. I worked 3 days straight one time. I slept in the hospital 2 nights in a row. I was on call for weeks, months on end from time to time. So I was accustomed to working hard. And then I was racing my bike during some of that time. so when I quit racing my bike, and I was like, you know what, I have all this time. I poured my time into building my real estate business and doing that. And for me, multifamily made a lot of sense because of the demographics. So I just believed in it. I got into the medical device industry because of the demographics. I moved to the Carolinas, to Asheville, North Carolina, because of the demographics. I started investing in multifamily real estate because of the demographics. And I'm a numbers guy. I'm a nerd. I respect the fact that you take your competitive advantage, Fuquan, and you invest in the space that you're comfortable with and where you can probably add more value than somebody like me could. But for me, looking at a spreadsheet is something I'm very comfortable with, and working in that space. So that's another lesson if you're listening. If it resonates with you, go with that. You don't have to be just like somebody else. You can invest in what you want. And I loved what you do. I love what you do with the note space. But for me, this just made a little bit more sense to put my time into, which is why I did that. And then the who, not how is fantastic. That's actually my motto for the year, is who, not how, because while it's important to understand your business and have a grasp on everything that you do, you can only grow as big as you are if you're just one person. But if you find the right who's that are better than you at certain things, you can literally grow forever and do that. And you help so many more people. And I think that's the thing that's so cool. So for me, I went from working with one partner who had kind of a very narrow scope and did that, to working with now a true team where we have built a team with the goal of managing $1 billion portfolio. And we're about halfway there, by the way. So, we have an acquisitions team, we have a management team, we have a finance team, we have an investor relations team, and everybody has their own who's within there. And as we continue to grow, we have individuals that continue to have opportunities underneath there. So I just finished meeting with my marketing guy here. We always meet the last Friday of every month. And I let him handle my website, handle my social media marketing, handle my emails and all that stuff. I do the content. It has my own voice on it, but I know he's better at it than I am. He's just better at picking out pictures. And, he's like, hey, Chris, did you think about this? He helped me write my book. I'm an engineer. I'm a nerd. He's more creative. So, again, whether you're new starting out or whether you're kind of further along, I highly encourage you to think about kind of that concept that Fuquan talks about, who, not how.
Yeah, I love it, man. Thanks for sharing that with the audience. You dropped so many nuggets there, man. I was trying to keep up. I actually like the concept that you have in place and the team that you build out, and empowering your people to not do everything themselves, to find and leverage human capital, right? So I think that's important for everybody to learn how to do that, because you will grow exponentially by doing that. Delegating, right? I've been a control freak for the longest, and I've just over the last year learned how to delegate, because I always had in my tiny brain, no one can do it better than you. And I'm like, oh yes, there is. There's people who are smarter than you and who can do it better than you and who you can learn from. So I'm not an operations guy. I'm the creative person. I'm the visionary. So I had to find somebody to execute my vision, the engineer type person that can facilitate that. So yeah, man, this is great. And we've transitioned a lot as well with our model. And it's sort of like different than when we first met. I was just laser focused on notes. Prior to that, I did a bunch of fix and flips. I got punched in the face in 2008 when the market crashed, and I transitioned into notes because that was what was happening. And today we have a hybrid model where we invest in fix and flips. We have some rentals, we buy notes, we buy tax liens. So it's all in one vehicle, where it gives our investors a buffer and hedge against any market uncertainty. So I'm saying all to say the multifamily sector is where we're migrating to now to kind of hedge against inflation, because I think that is really the ultimate thing that you're going to do. Like, you're building a $1 billion portfolio, that cash flow is definitely going to help you hedge against inflation. So.
Yeah, in real estate, I mean, again, whether you're talking multifamily or single family or fix and flips, real estate is an inflation hedge. It's producing cash, but it's also, its value increases. So as inflation goes up, and that's what's great about it. It goes both ways.
Yeah, let's talk about the coaching a little bit. I heard you mention that. I didn't get that. I knew you was doing the multifamily thing. Now you're coaching too. Let's talk about that. How can somebody get in contact with you and learn? Because there's a lot of people who get into real estate and they see the fix and flips, like, oh, that's sexy. I can buy a property, fix it, and sell it. they don't understand the cash flow part. And that's where I went wrong. And I felt when the market crashed because I was a guy fixing and flipping, getting those large chunks of cash, and I did not have cash flow, and I suffered severely when I didn't have any income. So how did you just say, you know what, I'm not going to do a 2-family, a 3-family and get income from that. I want to go multifamily. And then, you said you did 400 doors or something earlier. Was that 200 and something doors, right? The last
We're
acquisition?
actually, yeah. So we're in the process. We're acquiring 800 doors here right now. So we just closed one, and we got
That's
2 more.
multiple properties. That's 800 doors. Okay.
Yeah, we got 3 properties. We just closed one yesterday. We got 2 more coming up in the next like 5-6 weeks here that we'll be closing on. So
why that model versus a 4-family or 6-family or something like that?
Yeah, great question. And the thing is, you can invest in a single family home, 4-plex, 8, 20. They can all be profitable. It depends on your own strategy. So for me, the team concept, my experience in business and sales and kind of recruiting, and like you're saying, bringing people on board, it made sense with the efficiencies, and understanding how to kind of turn those financial levers and do that. So, again, I started out as a single, but then I said, well, wait a minute, like there's no reason for me to go from 1 to 10 to 20 to 100. I'm just going to go from 1 to 100 because, it's the same amount of work. Now it's a longer bridge, so to speak. You have to have, all the right pieces in place. But once you have it up and running, it's kind of the same amount of work to buy a property, whether it's 10 doors or whether it's 300 doors. So, and there's efficiencies when you get over 150, 200 doors. Then it's a real people business at that point. You're actually running a business. And I always tell investors, Fuquan, think of this like we're buying a business. That business just happens to be an apartment complex. And you mentioned the coaching. It's kind of, it's kind of a secret right now. I haven't started to scale it. When I left the medical device space, part of the mental block I had was I really enjoyed training, finding talent, developing talent, and helping people really achieve their peak performance and their maximum. So I call myself a performance coach for professionals. I'm going to help small business owners, or I help small business owners, sales professionals, real estate entrepreneurs get the most out of their business. And what I teach is the same thing I talk about in my book, which if I didn't mention how to get it, nextlevelincome.com. If you click on the book link, put your address in, I'll send you a free copy of my book that you can get there. So I teach people how to make more money doing what they're doing, how to keep more money. So we talk about tax strategies. We also talk about using things like insurance and entity structure to keep more of your hard-earned money. And then ultimately, the third piece is how to grow that money. And what I talk about is using an investment strategy where you can invest in passive vehicles like yours, Fuquan, like what our group has to offer, and continually feed that area. And if you feed that and you have true financial independence, I believe that people become their best selves. You can focus on what you're really good at, that who, not how model, where you're working with your unique ability. It just energizes you. And I love getting on calls with my coaching clients. So I have a small group of coaching clients right now. I think I have 1 spot left. I have to check. I only coach 12 people at a time. But later this year, we're going to be introducing another model for people that either, I can't work with one-on-one. Also something that's a little more broadly available to people that are out there. So we're looking to scale that here.
I love it. Yeah, I took the coaching hat off. I got 2 boys that I got full custody of, so I had to make sure as they were getting older, I had to spend more time with them. And still running a business, it was tough. And I take my hat off to you because when you're coaching people, you have to be dedicated to them, and you not be on call, but you want to make sure if someone's investing their money with you and their time that you're reciprocating that and making yourself available to kind of help them grow, right? And Absolutely. I do love that you have the smaller groups because it's a little bit more intimate when you do that. So I love it, man. And that's a good way to give back also, right? And share and pay it forward what you're learning. And it makes you better as a teacher as well. More skills you can do, joint venture deals with people, collaborations, a lot of different stuff that you mentioned. Just going back to what you were saying, actually, and this is probably something a lot of listeners don't know, it actually took me 20 years to figure out that multifamily was a better model than the 1Z, 2Z, 4-family stuff that I was doing. I was like, hold a second, I've been in this game for 20 years. Why haven't I, especially watching the stuff you're doing, I'm like, wow, this guy just jumped in and he's buying multifamily here and there. And like I said, you inspired me. And I actually locked a 95 unit deal under contract in February. I still have it. It's an
Awesome.
exception in title, but it's in
Yeah.
Alabama. It has an exception title. We're trying to clear. The mayor is involved.
Cool.
It's that
Yeah.
big. It's just
Yeah.
it's a heavy lift though, but I got it for a really good price. So that's my first multifamily
Awesome.
deal. So I'm looking forward.
Congratulations.
Thank you, man. Looking forward to
Yep.
closing that next week, sometime the
Sweet.
first week of the month, and that's my into the multifamily sector. And we're
Heck yeah.
targeting other areas in low income communities where we can get Section 8 and stuff like that. Again, our model is to make an impact. But I love what you're doing, and you actually gave me that inspiration to go and make that switch to the multifamily.
Awesome, man. Well, I can't wait to hear about it. And I
love all your content too, man. I'm like, let me take some of that paragraph and repurpose that. No, I'm just kidding. But I love the content you put out, the way the guy who you use put to send the emails out, how you keep your investors updated, how if you have a new offering, how you notify everybody, how you walk the property and show the video. I saw you walking the other day on something you put out, the swimming pool. I was like, I love it. So keep that up. And I think that's important. That's probably something you teach your students also. As part of your coaching program is that you got to be boots on the ground and kind of show what you're doing so people know it's real. So how did you get that trust level from people and investors? Let's talk about that a little bit. The trust level, because when you're raising capital is a relationship business, right? You do your due diligence on somebody. You don't just send them money. Of course, you watch them for a while, do due diligence, have a conversation with them, find out their references, and go from there. What are some of the things you do to build a trust factor with investors to join your syndications?
Yeah, the key is communication, number one. So, a lot of, our group has grown to, we have over 400 investors now, but, it took 6 years to get there. And really it took a lot longer than that, Fuquan. So I tell, I have clients and my coaching clients, they say, hey, I want to make a switch into real estate. I want to leave this business, and or people that are leaving one role into the next. And people always remember kind of what you did in your professional career, whether you're a business owner, whether you're an entrepreneur, like yourself, whether you're like a sales professional like I was. People remember the way you act. So number one is do what you say. Do what you say you're going to do. Be a trustworthy person. Be an ethical person. And the who, not how is a great concept. Also, an abundance mindset is very important in my mind. If you have a scarcity mindset, you're always trying to take for yourself. People remember that too. Mm-hmm. You have to go out there and give. Richard Wilson, he was the second podcast guest I had on the show, on the Next Level Income show. He says he basically gives away 80% and he charges for 20%. And I think that's great. It's the 80-20 rule. Just give away knowledge. Now, you can't give away all your time, right? You can't give away all your time. You have to value your time, and that's really important. You have to guard that time, but be free in helping people and trying to connect people and give away that knowledge. That's number one. Then communication. You communicate with people. Hey, Fuquan, it's Chris. Just wanted to let you know, I'm no longer in the medical device industry. Hope we can catch up. And, oh, well, what are you doing? Oh, this is what we're doing. It's a easy conversation. Well, it might be 5 years later that we're having a conversation. What do you know about me? What I've been doing here recently because we've stayed in touch. You have to have some sort of way to stay in touch and communicate with people. It can be as easy as picking up the phone. Hang on a second. I do this, but I think, what do the kids do now? Yeah. Like a cell phone, right? It can be, so if you're young and you're watching, there's a cell phone, but I still pretend, like the old phone with the cords on it. Yeah. So, stay in touch with people, communicate with them, let them know. The other thing that I do is, I do what I suggest. I do what I teach people. So, if people say, hey, Chris, what are you doing with your money? I tell them what I'm doing with my money. I'm investing in this deal. I use this insurance strategy, this specific strategy. We put a banking page up on the website so people could learn about the strategy, that I use with whole life insurance to help protect the wealth that I've grown, but also have options and also protect my family, right, with that insurance. So I try to tell my story, try to share that knowledge, try to help people, get a shortcut. And then, the big thing is, and this is a component of the communication piece, if I have an investor that's interested in working with us, educate. I have investors, they say, man, Chris, I'm sorry I'm asking you all these questions. I said, no, I would much rather you ask me all these questions, understand thoroughly what's going on, because you're going to be more comfortable. And by the way, I'm going to be more comfortable too, because if you don't want to invest in this project because you're not comfortable, that's okay. This isn't a fit for everybody. That's totally fine. it needs to be a great fit for everybody that's involved. And that ultimately is going to be, a great long-term relationship. No different than if you're dating somebody and you're sitting across and you're trying to make it work, trying to have a conversation. If it's not there, it's not there. That's all right. That's okay. So, I think those are all the things that come to mind when we kind of talk about this and building trust.
Yeah, it's all relationships, and you oh man, you nailed it. You put a lot of key points. Being a go-giver, right? Not expecting anything, always wanting to add value to the next person, and the reciprocity will kick in. This is a great episode, man. Thanks for sharing. Make sure you guys go check out nextlevelincome.com. Chris Larsen. Also, if you want the book, nextlevelincome.com/book to get that book. And it's on Amazon also, right?
It is. And you're welcome to buy it off of Amazon. Yeah. We just launched our audio book. But again, I encourage you, like I was saying before, we try to provide as much education for free. I'll give your audience a free copy if they go to the book link, put your address in. You can download an ebook and the audio book there as well.
That's awesome, man. Thanks again for coming on the show. I really appreciate it. Oh, man. PFREI, a passion for real estate investment. I'm your host, Pamplin. Today we had Chris Larsen from Next Level Income. Make sure you guys go check out the site. And if you're looking for a way to transition into multifamily, you said he got one slot left. I don't know by the time this airs that's going to be available, or just reach out to him and he'll let you know when the next session is. But man, thank you for coming on the show, and looking forward to continue to watch your success and the things that you're doing out here, man. Appreciate it.
Oh, it was a treat, Fuquan. Thanks for having me.